everyone. Today, I'd like to share a real case study on how cross-border companies can tackle financial and tax challenges. This topic will be especially useful for foreign invested enterprises, small and medium-sized businesses, and their management teams. Let's look at one specific scenario: how a Chinese parent company can effectively manage its U.S. subsidiary. Recently, I worked on a consulting project for a pharmaceutical company. The parent company is based in China, and it had acquired a laboratory in the United States. After the acquisition, the finance team in China quickly ran into difficulties. They were unfamiliar with U.S. accounting standards, and they struggled to use QuickBooks, the ERP system commonly adopted in the U.S. They also faced challenges in handling American payroll, how to calculate employee salaries, make proper accruals, and book payroll transactions accurately. That's when they reached out to me for professional cross-border consulting. Over the course of 6 months, I helped them streamline their processes, clarify key financial workflows, and resolve their difficulties with QuickBooks. This case also highlights broader lessons for any company planning overseas expansion or an acquisition in the U.S. Such cross-border ventures bring great opportunities, but also introduce culture shock in financial and tax practices, and if not addressed properly, potential risks. Through this real example, I'd like us to examine the core challenges of cross-border financial management along with practical solutions. The first challenge is the difference between Chinese and U.S. accounting standards. A Chinese accountant may not fully understand the technical requirements of U.S. GAAP, especially when it comes to recording payroll, issuing paychecks, or handling payroll taxes. These include federal tax, state tax, and employee benefits such as Social Security and medical insurance. Without a clear grasp of the calculation logic and deduction ratios, Chinese finance or HR teams often struggle to reconcile amounts and classify them correctly under accounting rules. My role here was to provide guidance and consulting to ensure accurate compliance. Another major issue was consolidation. Because the parent company is in China, they needed to prepare consolidated financial statements under Chinese accounting standards. But at the same time, they also had to properly account for the U.S. lab's assets. This raised important questions. Should the U.S. lab's assets be treated as leased assets with the right of use entry, or should deferred tax assets and liabilities be recognized instead? These technical accounting choices also had tax implications, so the company sought my advice on this front as well. Finally, there was the matter of systems integration. Since the U.S. lab was using payroll management software, they wanted to know how to connect it with QuickBooks so payroll data could flow in automatically. They had concerns about the setup, mapping, and data transfer between the two systems. This was another area where I provided support. So, in summary, this consulting project covered several key aspects: U.S. payroll and tax compliance, consolidation under Chinese and U.S. standards, and the effective use of QuickBooks with third-party tools.
If you enjoy this type of content, don't forget to like, follow, share, and save this channel.